What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to take a look at why the crypto market is crashing, when it could see a small relief rally, and when I will personally be flipping bearish. We're not at that level just yet. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders, the better investors we're all going to become. So first things first, guys, as I'm sure you've probably all heard and seen, Aaron covered it in his video earlier today. We have some pretty sizable liquidations in the crypto market here, over $1 billion over the last 24 hours to be exact. This is something I think I mentioned in a previous video, that the thing that makes crypto trading so hard is these liquidations. If we didn't have all this leverage and all these liquidations, then it would be a lot easier to trade crypto, because you wouldn't get these kinds of like deviations and reflexive moves. Because basically, guys, for those of you who don't know, liquidations you could think of as just kind of being automated selling when a certain level is hit, or like when prices fall below a certain level. Basically, traders are basically forced to sell, and it basically creates like this cascade, like this automated selling. And typically, when you see these liquidations, they're very aggressive, they're very fast, they're very big, but they tend to be fairly short-lived. And I guess the silver lining in this case is that once you've had this amount of liquidations, it's very hard to get another leg lower. Like, once you've wiped out all the leverage, it's hard for the leverage decline to continue. Let's say, can there be some more spot selling around the margins, like people waking up, panic selling a little bit? Sure, but most of the selling pressure at this stage, especially at this stage in these crypto market conditions, most of the selling pressure and most of the buying pressure, for that matter, is basically as a result of a long liquidation or a short squeeze. So when all those long liquidations are gone, it's kind of hard for crypto prices to go much lower, because you've already kind of all the automated selling has already happened. And yes, again, there could be a little bit more selling around the margins, but once you have a move like this, it's hard to see how prices can go that, like, to see another big leg, another 5 or 10% lower. It's not very likely. But of course, that does beg the question: why did we get these liquidations? Of course, I'm sure, as many of you have heard, there's been lots of concerns that today we're going to get a Black Monday type scenario in the stock market. Basically, that the stock market will just completely collapse. This is something that CNBC host Jim Cramer has been saying. He's saying, watch out, like on Monday, stocks are going to crash another 20%. And I do imagine that there's quite a few crypto holders that are panicking, getting very worried. And not only that, guys, but one thing that a lot of people are forgetting is that taxes are coming up here in the US. Of course, 2024 was a pretty sizable day for stocks, or sizable year for stocks and for crypto in terms of gains. So I do imagine that leading up to April 15th here, there's a lot of people that are thinking, I need to take some profits now. I need to sell a little bit of assets so that I can repay, or so that I can pay down the taxes from the capital gains from last year, right? Assuming they took profits last year. So I do think that this is another thing that is potentially causing sell pressure around the margins. And when people are hearing, or concerned that markets could continue falling, they're thinking, well, I better sell now then, before we get this Black Monday, right? I better sell now so I have enough money to pay down those taxes in a week or 2 weeks time, right? This is another factor I think that's been kind of putting pressure on the crypto market. And what's really interesting is that a lot of macro analysts actually think that we're going to start to see a recovery after tax day, because basically at that stage, all the selling related to taxes will be over, and you're going to start to see more inflows, especially at the beginning of a new quarter, lots of rotation, and potentially a gradual recovery in assets. And that brings me, of course, I guess, real quick, before I forget, I do need to note that one thing that's going to be coming up here, and what a lot of people are missing, and it's actually very fascinating, to be honest, because a lot of people are talking about like these retaliatory tariffs that China has put on the U.S., but most headlines do not include the fact that these retaliatory tariffs do not start until April 10th, which is this Thursday. And what that tells me is that China wants to negotiate, obviously, with the U.S. So these negotiations are still ongoing. So I just do find it interesting that, markets are freaking out a lot. Everyone's freaking out. They think it's all over. And maybe it's because they know that maybe the negotiations aren't going to go too well. But the fact of the matter is that we still have a few more days, before I guess there's any real cause for concern. Of course, the main reason why Jim Cramer's talking about a Black Monday is because they're worried about a trade war, particularly, I guess, specifically between China and the U.S. But the thing is that, in my view, I think it's a little bit too premature. And again, I do think that a lot lot of the selling, again, is related to taxes, that people are saying, look, I'm not going to wait until April 10th to find out if things get negotiated or not. I'm going to sell now to make sure that I have enough money to pay down taxes. I'm going to, go risk off. I'm not going to wait and see what happens here because it just seems to be getting worse and worse and worse, right? And then the result is that you kind of have, I mean, I don't want to say pricing it in. I don't know if it's really hard to price things in that are political, but I suspect that a lot of investors are thinking, look, I'm just not going to take the risk. I'm gonna sell now and ask questions later, right? I'm sure you've seen a few headlines about that. But then, of course, this begs the question of what could cause kind of like a bounce or a recovery rally or relief rally, I guess is a better term, in the short term here, besides the possibility that China and the US could come to some kind of negotiation or even just delay, like if they were to say, okay, we're going to delay, negotiations are still ongoing, we're going to delay it by a week or a month or whatever. Honestly, a delay would not be ideal. It would be better if they just resolve it. But assuming that negotiations are sorted out, that would be one catalyst. But the main one that I'm watching, guys, is the inflation print that comes out on Thursday, also on April 10th. So it's going to be a pretty interesting day. And the thing is, that, guys, that real-time inflation indicators from Trueflation, I highly recommend following these guys, actually. They basically have like these real-time inflation trackers for the US and UK, Argentina, India, and etc. And they literally track on a daily basis. And as you can see here, inflation, as measured by Trueflation, is very far below the Fed's target. Inflation seems to have collapsed, I guess, starting at the beginning of March, end of February, which, of course, because the numbers that are released this Thursday, those will be for March, and you can see that all of March, inflation seems to have collapsed according to this real-time indicator, which suggests that the U.S. inflation, the official data, could also come in lower than expected. And if it does, guys, then I do think that's going to be very bullish for the markets because, of course, it's going to foreshadow that the Fed could cut. And this is one thing, a lot of people have been talking about, like the Fed is going to do emergency cuts and blah, blah, blah. Of course, I don't think that's going to happen, but I do think, if that was to happen, let's just say hypothetically, if the Fed was to do an emergency cuts, first they need to have like a, how do you say, they need to have like some excuse or justification or be able to point and say, we can do this without having to worry about inflation, right? So if inflation does come in, let's say way lower than people expect, like closer to 2%, then it actually is possible that the Fed could do emergency cuts. And this, before their next meeting, which is scheduled for early May. And this is because, guys, what you're looking at here is something that I actually covered in a recent live stream I did with Aaron. This is the 2-year yield, which basically is you could say like a proxy for the Federal Reserve's interest rate policy. A lot of macro analysts believe that the Fed is not actually in control, that the Federal Reserve just follows whatever the 2-year yield is doing. And as you can see here, guys, that over the last month or so, the 2-year yield has completely collapsed, and especially in the last few days, the 2-year yield is now at like 2.5 to 2.4%, somewhere around that. Or sorry, yeah, 3.5%. And when the Federal Reserve's interest rate here is around 4.25, I think their range is 4.25 to 4.5 or something. So the Federal Reserve is up here around 4.25, but the market is basically screaming at the Fed, like, you need to lower down at least 3.5%, like right now. That's what this is basically telling the Fed. And of course, Jerome Powell came out on Friday and he said, look, like, we're not going to lower interest rates because we're worried about the inflationary effects of tariffs. But if they see that inflation is coming down more than they expect, then it's going to be very hard for the Fed to keep interest rates high because in that case, Trump was saying, oh, the Fed needs to cut because the Fed is being political for not cutting. Right now, the Fed can argue, actually, no, we're not being political. We're just being aware of the fact that inflation could come in higher. But if you start to see inflation collapse, which again, like based on these real-time indicators like Trueflation, it suggests that inflation's collapsing. It suggests that inflation's around like 1.5%. And right now the markets are expecting 2.5%. Obviously, it's not going to fall all the way down to that level, but you could see, let's say, I don't know, like a drop to like 2.1 or 2.2, and it will be a massive drop in inflation. And the Fed might at that stage say like, okay, we have enough wiggle room basically to do a cut to like calm things down in the markets, right? But for the time being, we're just gonna have to wait and see. Long story short there, watch the CPI print on Thursday. Something that I mentioned to members in the Coin Bureau Club is like, we're probably going to see quite a bit of like chop and volatility ahead of that date, especially with this whole negotiations with China. But on April 10th, we should get some clarity, and with some luck, we will get a bounce in crypto. But between now and then, things can get pretty volatile. So don't get too freaked out. And again, this brings me, I guess, to probably the most important bit, and that's when I personally think that it will be justified to flip bearish. Of course, a lot of people, they're saying it's over, it's over, it's over. But again, just like when I look at Bitcoin's chart, it's like I just don't see that, and especially when we look at the total crypto market cap, it's the same thing. Yes, a lot of altcoins are down, but in my opinion, like the reason why a lot of altcoins are down is because you had holders from 2021 and people who bought a lot in early 2024 who've been waiting to sell. They've been waiting for the pump. The pump hasn't come. Now they're hearing about Black Monday. They're hearing about this tariff war. They're hearing about a global recession, and they're thinking, I'm out. I don't want to wait another 2 or 3 years of bear market. I need money for taxes. I need money, to deal with inflation and all this stuff. I'm not going to wait for crypto to pump. I need to sell now, right? And this is why a lot of altcoins, I think, have been bleeding so much over the last few months. But again, if you look at Bitcoin or the crypto market as a whole, it looks completely fine to me and is still very clearly in a bullish uptrend. And so long as Bitcoin, again, like Bitcoin leads and everything else eventually follows. And historically speaking, the biggest gains are always towards the final stage of the cycle, which, as I've been mentioning, I don't believe that final stage comes until sometime over the summer. So, we just began the spring. So we're like 3 to 4 months out from like, let's say or I guess you could say more like 2 months out from the beginning of the final stage of the cycle where altcoins historically saw their biggest gains. And of course, everyone is panicking. They already think it's over. They've thrown in the towel, et cetera, et cetera. But in my view, so long as Bitcoin can stay above the Bollinger Band moving average on the monthly, which is currently around 65,000, ideally it would stay above 70,000. But if it was to drop below, I wouldn't panic too much. So long as it's somewhere between, let's say, 65 and 68,000, if it can hold that level, then I believe that the crypto bull market is still intact, and I will not be changing my thesis. But of course, I do need to also flag that altcoins are looking very weak here, as measured by others, which of course some would argue is not a very accurate measure. But I do think it still gives us, it's a good kind of like indicator of altcoins more broadly. Of course, altcoins are now basically at a very lower end of a range. We're on the weekly here, by the way. Altcoins are at a lower end of a range here, where if they fall too much lower, specifically if they were to fall below 180 billion for a prolonged period, like here you could see there was a couple wicks below 180 billion. That's happened here in the past. But if we were to see a prolonged drawdown below 180 billion, then yes, that would be another kind of red flag for me to say, okay, maybe this cycle is over, maybe it is different. But until that happens, I continue to be bullish, which is very frustrating for people. But this is my thesis. It's a thesis I've had since last spring. For about a year, I've had this basically this price action in mind, more or less. It didn't play out, of course, exactly as I expected. It never does. But so far, in terms of a cycle, everything has been going more or less as I expected, especially as it relates to Bitcoin and larger altcoins, which of course brings me here to the crypto market cycle chart. This is one I've shared many times before. 2025 is supposed to be like the big blowout year for crypto, where of course I guess technically 4 months in, a lot of people are panicking because we haven't seen up-only price action, when again, even by the traditional analysis of the cycle, most people believe that the most bullish phase will start at the end of the year, like in the fall. I think it's going to come over the summer. But regardless, even based on the, let's say, traditional analysis, people would say, oh, well, we're not going to see recovery until the fall. But in my view, if we don't start to see a recovery by the end of May, then that would be another reason to flip bearish. So again, just to recap quickly, if Bitcoin was to fall like significantly and for a sustained period below the Bollinger Band moving average on the monthly, that would be one red flag, potentially reason to say, okay, yes, this time is different and it's time to flip bearish. If altcoins were to fall, let's say, I don't know, another 10 or 20% from here, and stay at those levels and continue grinding lower, then that would also be a red flag. And if there's no recovery by the end of May, then yes, that would also be a red flag and a reason to flip bearish. But until those three things happen, then there's no reason, in my opinion, to be bearish, which is very hard. And especially, you're seeing these top tier traders like Bob Lucas, who recently announced that I think he was taking some profits or selling out, saying like, look, like based on his analysis, he thinks this cycle is over. And there's like, well, I don't think he said that specifically, but he said there's like, caution is warranted. Let's say he's taking profit, or I guess taking profits or just selling out of his positions. And he kind of admitted, he's like, look, like me capitulating, that could be a bottom signal here, and I'm taking one for the team, which I do think is, a potentially one, it's a good possibility, especially when you combine the fact, looking at, we can actually pull up Ethereum here. If we just pull up ETH on USDT, and we can take a look here that, of course, ETH is looking absolutely brutal. Like this is completely unprecedented. But if you were actually to go, let's see, Ben Cowan, if we can find him into the cryptoverse, I think, into the cryptoverse. So Ben, I think, just did a video, saying welcome home Ethereum, showing here. I should have had it pulled up earlier. Sorry about that, guys. But you can see that Ben has basically basically, I mean, in my view, he's kind of like declared that Ethereum has basically finally hit this level. So obviously from here, especially if we look at, I think the ETH BTC pair, I won't pull it up just for the sake of time. But if we look at the ETH BTC pair and the ETH USDT pair, according to Ben's analysis, ETH is probably at a local bottom here. And yeah, I mean, it's pretty brutal. It's a little bit unprecedented, but I mean, we'll have to wait and see. Like by the end of the month, I do think that this candlestick pattern here on the monthly for ETH will turn out to be kind of bullish. And I do expect that starting in April, we're going to start to see a recovery up to the Bollinger Band moving average on the weekly and then to the monthly, which from the current level, it's like an 80% gain. So who knows, maybe in a couple days after we get some clarity, I'll start going long and I'll show you guys that trade. But of course, before I finish things up, I do need to show the Coin Bureau deals page here. We have up to 20% trading fee discounts and up to $600 of bonuses on Binance. That's the biggest deal that you can get. These deals are completely free, whether it's on Binance or the other exchanges that we offer. They're offered exclusively through the Coin Bureau. When you sign up, it's super simple. You just click the button here and you just enter your information. It takes 2 minutes to sign up. You get a trading fee discount, the exchange gets a new user, and we get a cut of those trading fees. That's how the Coin Bureau makes its money. We don't care, what cryptos you like or you hate, so long as you're looking to buy and sell and trade. We're here to give you the tools to do that. And we also have deals on wallets, which you'll find in the description. Anyways, guys, if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.